What do you think will happen to Tesla and its stock as experts predict tough economic times ahead? It is known to all how volatile the stock market is and how Tesla suffered a lot in the past year because of this. With a lot of competition in the EV space, who knows how Tesla stock will perform amidst a tough economy? If the Federal Reserve does what's necessary to contain inflation, I think a slowdown is likely to come. The odds on that happening sometime in the next 12 months I think are pretty good, perhaps 70%, said former United States Secretary of the Treasury Larry H. Summers. In a reply to the said tweet, Tesla and Twitter CEO Elon Musk said, "Fed data has too much latency. Mild recession is already here. It's not like just the canary in the coal mine SVB died. One of the staunchest miners, Credit Suisse, died too. And the cemetery is filling up fast." He concluded, "Further rate hikes will trigger a severe recession. Mark my words." In a recent CNBC interview, Tesla CEO Elon Musk and the TV network's financial journalist and market news analyst David Faber talked about how inflation and the recent rate hikes by the U.S. Federal Reserve will impact Tesla. According to Musk, he expects the next 12 months will be challenging and difficult for the global economy and companies. He added that Tesla isn't immune. "You can think of raising the Fed rate as somewhat of a brake pedal on the economy, frankly," Musk said. "It makes a lot of things more expensive, certainly things that are bought with credit. But then it has a downstream effect even on things that aren't bought with credit. If the car payments or your home mortgage payment is absorbing more of your monthly budget, then you have less money to buy other things." Notably, the Fed hiked interest rates for the 10th cycle in a row by another 1/4 percentage point in early May. In light of this, Musk expressed his concerns and warned that the government most likely wouldn't be lowering rates anytime soon. "My concern with the way the Federal Reserve is making decisions is they're just operating with too much latency," Musk continued. "Basically, the data is somewhat stale. The Federal Reserve was slow to raise interest rates, and now I think they're going to be slow to lower them." Musk compared this ideology with how Tesla sets and adjusts its prices based on demand, noting that the company uses real-time information about orders placed on any given day. During the shareholder meeting, Musk touched on his bleak outlook for the economy in the year ahead, saying the car industry would be vastly impacted due to the hiked interest rates, but said it is important not to overreact. "It's important to remember that there are good times and there are dark times, but then the good times follow the dark times," he told attendees on Tuesday. "So my advice would be, don't look at the markets for the next 12 months. If there's a dip, buy the dip, and I think you will not be sorry." In light of this, the tech mogul warned that the next 12 months are going to be difficult. He added that no business is immune and expects a surge of corporate bankruptcies. Musk made this prediction during Tesla's annual shareholder meeting in mid-May. Musk was trying to explain why Tesla decided to lower the prices of its cars 6 times this year. "The vast majority of people buy cars based on the monthly payment," he explained. "It's just, do they actually have enough money? Can they afford it?" He then added that this issue has become even more important because interest rates are high and at the same time, there is a banking crisis that prevents many banks from lending money to everyone who needs it. Lenders, he argued, are focused on saving themselves from failing. In the shareholders' meeting, Elon Musk also said that the company will make changes to its business practices, including the decision to begin advertising for the first time in its 20-year history. This is perhaps a sort of an attempt to get all the help that he can get to make Tesla suffer a little less in the tough economic times he predicted. Musk shared, "This is going to be a challenging 12 months. I want to be sort of realistic about it. Tesla is not immune to the global economic environment. I expect it to be, at a macroeconomic level, difficult for at least the next 12 months. However, he said that Tesla will get through it and will do well, although that will not be the case for most companies," he added. "I think we'll see a lot of companies actually go bankrupt," Musk claimed. "I want to make sure that this is not just the good news parade. It's important to understand that no company is immune to the macroeconomic environment." Still, he pointed out that it won't last long. "It won't be darkness forever. I expect probably a year of difficulty globally for everyone. And then, my best guess is that the global economy turns around in roughly 12 months, he added. He also sent a reassuring message to Tesla investors. Tesla will be in an extremely good position, so anyone who is a long-term investor I think will do extremely well. Notably, this is not the first time that the billionaire has warned about the health of the economy. In April, Musk said that if the Federal Reserve continues to raise interest rates, the economy, which is already in a mild recession, will experience a severe recession. Meanwhile, in a mid-May Fast Money episode, Deepwater Asset Management managing partner Gene Munster said that Tesla stands above the rest when it comes to growth opportunities. In fact, a few days ago, Tesla stock soared to a 2023 high, which is notably up by more than 110% from the January low. After over 6 months, the electric vehicle maker pairs its historic 2022 losses. Everybody knows that after surging during the pandemic, Tesla stock faltered dramatically last year as investors lost trust in the company's promises of near-limitless growth, and Musk's Twitter acquisition, which he controversially bought last year for $44 billion, pulling away the billionaire's time and financial resources from Tesla. Wall Street began to regain faith in Tesla after the company reported record quarterly revenue and earnings in January, setting forth a rally that gradually gained steam as Musk found a replacement as Twitter CEO and played nice with lawmakers in the US, China, and beyond. A few days back, Tesla stock rallied more than 3% to $229 in early trading, helped by the federal government's confirmation Tesla's cars qualify for a $7,500 tax credit and the Mongolian government's indication it's open to hosting a Tesla battery factory. In light of this, Elon Musk's firm now trades at its highest level since November 1, 2022. Today, Tesla shares are up 111%, the third largest return of any company in the S&P 500, which is up 12% this year, after cratering to a 2-year low in early January. Because of this, Musk has once again become the richest person on the planet, according to Forbes calculations, topping LVMH chairman Bernard Arnault for the first time in 6 months. By early June, Musk was worth $216 billion, up nearly 50% since late 2022. Many are convinced that the surge in Tesla stock is all thanks to the fact that all Model 3 sedans now qualify for full EV tax credit. Tesla recently announced on its website that all versions of the Model 3 sedan now qualify for the full federal EV tax credit of $7,500. Previously, the cheaper Model 3 rear-wheel drive version qualified for half the amount. The federal government confirmed the announcement on its fueleconomy.gov website. The federal government's requirements for the EV tax credit mandate that 40% of the critical minerals be extracted in the US or a country with a free trade agreement, and 50% of the value of the battery components must be manufactured or assembled in North America. Though no reason was given for the change, Tesla updated where it was sourcing the materials for the Model 3 rear-wheel drive batteries or where it assembles the packs. Prior to the announcement, Tesla was reportedly using LFP lithium iron phosphate battery cells made by China's CATL. Nevertheless, the inclusion of the full federal tax credit means the Tesla Model 3 RWD now costs $32,740 if buyers meet criteria including income restrictions and MSRP caps, $55,000 for cars, $80,000 for trucks and SUVs. Tesla investors and analysts are looking for its Gen 3 vehicle platform to open up a whole new market of middle-class and younger buyers for EVs. It turns out some of those buyers, especially in California, could get a Tesla on the cheap right now, or at least while incentives last. Subscribe for more.